Let us review today's price action on XAUUSD or gold. Today being 3rd of August 2026 on a Monday. So this is what is happening on XAUUSD in the 15-minute time frame. Price opens here, and this is where price is opening. That forms the new day open level, and then we want price to go up and then come down and give us some sort of confirmation that we have a bearish bias. And you can see today is what we have. Let me clear these charts again so that we can just start afresh. So that is the new day open, and if you open higher time frame candles indicator here, you can see that is exactly where the Monday's candle opened, which is at this level, exactly at that level. And you can see it forms a small wick to give us a potential high of the day. So the moment we have this market structure, is it a market structure or a break of structure? Whatever, it serves the same purpose. Yeah, so the same purpose to show us the potential direction of the day, and as a result this becomes the assumed high of the day. Let me just mark it. So this becomes the assumed high of the day. Assumed high of the day, following the principle of open, high, low, close. So at this point we are now looking for sales because price has already given us a potential bearish bias, following the concept of open, high, low, close. And also we can see here that price is sweeps this liquidity in the lower time frame. You'll see that, and also price is coming off from an inverted fair value gap right here, which is right here, and it goes down with an engulfing candle. Also here, this is also a form of engulfing candle after a sweep of liquidity. So those are 3 or 4 confluences to tell us that price is going to go down. Now from here, once we have this BOS, if price is to retrace back upwards, we are asking ourselves, where is price going to react off at around this area? So you can see from this zone, you can actually use a Fibonacci to mark your optimum entry level. This is from here to here, and you can see price comes all the way to 0.75, and you want to ask yourself between these levels or in the premium side of that range, where is price coming to? It is coming to this inverted fair value gap right here. So this IFVG is what now gives you a reaction, and this reaction that you're looking for is an engulfing candle reaction. You can see this is a 2 candle engulfing reaction from this inverted fair value gap. Now from here, the next thing you want to see is price retracing to the premium side of this inverted FVG, of this pattern or this range that has been given to us by this engulfing candle. And from there, this is now where we look for sales. The purpose of this engulfing candle is to give us or to help us frame an entry, a stop loss zone, and take profit to Tatumia market structure. So this is your potential stop loss level just above this engulfing candle. So as price is coming to this zone or the premium side of this range, in the lower time frame you want to look for a confirmation, and for us we always use this single confirmation every time we get into a trade. The first confirmation is we have an engulfing candle in the premium side. In the lower time frame, you're looking for an engulfing candle from this zone here, and you can see price gives us an engulfing candle. From here you can opt to get a midpoint entry or an aggressive entry at the closure of that engulfing candle. Stop loss just above this engulfing range, and now with that you can target these lows here and also these lows here. So that is the first one. And also in the lower time frame, you can see this gives a 5R risk reward ratio. And also in the lower time frame, which is the 1 minute time frame, we can also see the same thing happening, that we have an engulfing candle emanating from the premium side of that range, and this engulfing candle is right here. So you can also opt to get an entry from there and stop loss just on this level that has we had marked previously as our stop loss level, and you can see price significantly moves again to this level and also to this level right here, and this gives us a 4.38 risk to reward ratio, right? And now the other confirmation that we wait for is an RSI divergence, and this RSI divergence is inside this IFVG in the premium side of this range that was given to us by the 15-minute engulfing candle, and there are two engulfing candles right here. I mean RSI divergences right here, so you can delete that. The first one is right here up to this level, engulfing candle, get in at this point, stop loss above that engulfing candle, that confirms our divergence like that, and you can see this one gets stopped out, and then you can target again the same levels as before. As you can see, that gets stopped out or wicked out, and I've already shown us in another video how you can trade these kind of setups so that you avoid getting wicked out like this. Instead of placing your stop loss immediately at the above this level, you can wait a bit until price moves significantly in your direction is when you place a stop loss. Otherwise, if you get a full candle closure above this level is when now you stop, you close your trades, I mean. But you can see this one moves significantly. And the second RSI divergence that we can target to look at is this from here to here, and also from here to here on the RSI chart. And you can see this gives us an engulfing candle again, and this time you can see it moves significantly in your direction. Since this is the 1 minute time frame, you just place your trade at the closure of the engulfing, stop loss above that engulfing pattern, and now you are targeting the same levels as we were targeting before. So you can see this one gives us a very good risk to reward ratio, as we can see in the lower time frame. So the first TP could be here, you can see around that place, and this is a 7.6R, another TP at 9.7, and then a final TP at this swing low right here, and that gives us a final TP of 16.58. and you can see the target is always to either get the previous day's low or the previous day's high, and this was the previous day's low. And you can see on HTF indicator here right here that targeting the previous day's low was the most sensible thing to do right here. So you can see price gets to this previous day's low, and that becomes the final TP as shown right here. So this is Friday's low right here, and that is the final target. If price was to move up, we will target the Friday's high, and that is why I always love using the daily candlestick formation to trade the concept of open high low close or open low high close. So that is today's price action review for XAUUSD. Until next time, bye bye.